All right, let's get right into it. So many people think that successful options trading is all about luck, hitting that one massive home run. But the reality, it's all about having a solid plan to manage your risk. In this explainer, we're going to break down the key differences between a disciplined trader and, well, a hopeful gambler. We'll cover the 4 core rules of risk management, show you exactly how to size your trades, and talk about that secret ingredient, mastering your trading mind. By the end of this, you're going to have a clear roadmap to trade with some real confidence.
So let's just start with the big one. The question that's probably on your mind, especially if you're kind of new to this. What is the #1 reason new traders fail? I mean, we've all heard the horror stories, right? Maybe we even know someone who lost a ton of money in the market. What's that one thing that truly separates consistent success from, blowing up your account? Let's find out.
And there it is. That's your answer. It's not about picking the wrong stocks. It's not even about having a flawed strategy, really. It's about not having a safety net. You see, without a plan for what to do when a trade goes south, and it will, even a fantastic idea can turn into an absolute disaster. It's like driving a race car without a seatbelt. Sure, you might be fine for a while, but one wrong turn and it's all over. That's why risk management is, well, it's everything. And this right here really gets to the heart of it. A gambler, they're basically at the casino, just betting on red or black. They're driven by pure hope and they have no real control. A trader, on the other hand, operates like a business owner. They have a strategy, they understand the odds, and they know exactly when to cut their losses to protect their capital. They're not just placing a bet, they are making a calculated business decision based on a solid plan.
Okay, so we've laid out the problem pretty clearly. Now it's time for the solution. In this next section, we're going to walk through the 4 core rules of risk management. And I really want you to think of these as your personal trading survival kit. These are the fundamental principles that will protect your money and, most importantly, keep you in the game long enough to actually find success. So yeah, this is probably a good time to grab a pen. Let's break these down. First up, you've got to set a strict risk limit before you even think about clicking that buy button. This is the absolute max you're willing to lose, no exceptions. Second, have a clear exit plan. This means using things like a stop loss, an automatic order to sell if things go wrong. Third, size your trades correctly. Don't go all in on one idea, no matter how good it seems. And finally, number 4, take your profits. Don't get greedy trying to squeeze out every last penny. The name of the game is consistency, not perfection.
All right, now let's see how these rules actually work in the real world. Because, it's one thing to know the rules, but it's a completely different thing to know how to apply them to your own account. So in this section, we're going to get practical. We'll look at exactly how to calculate your risk per trade and size your positions based on your specific portfolio.
Okay, so check out this table. It gives you some really solid, concrete guidelines. Let's just pick one. Say you have a $5,000 account. Look at that row. Your maximum risk on any single trade should be between $50 and $150. That's it. It's a tiny, totally manageable percentage of your capital. This whole framework makes sure that no single trade, no matter what happens, can cripple your account. It's all about playing defense so you can stay on offense.
If you take only one single thing away from this whole explainer, please let it be this number, 1 to 3%. This rule is your trading life raft. It's what's going to keep you afloat when you inevitably hit some rough seas. It's the one thing that will absolutely, positively prevent one bad trade from sinking your entire portfolio. So write it down, memorize it, tattoo it on your arm if you have to. Just never, ever break it.
So, you've got the rules. You know how to size your trades. But there is one more piece to this puzzle. It's kind of the secret ingredient that separates the good traders from the truly great ones. And honestly, it's the one thing that will either make or break you. And that is your mindset. I've seen it 1,000 times. A trader has a brilliant system, but they can't follow it because they let their emotions take the driver's seat. Let's talk about how to master that trading mind.
This is all about the psychology of trading. And believe me, it is just as important as any chart. After a loss, it is so tempting to jump right back in and try to win that money back. That's called revenge trading, and it's a one-way ticket to disaster. Instead, just step away, take a walk, clear your head, come back when you're thinking straight. Same thing goes for chasing. If a stock takes off without you, just let it go. It's so much better to miss an opportunity than to force a bad trade and lose money. The key is to really, truly accept that small losses are just the cost of doing business.
Now for the exciting part. Why do we follow all these strict, disciplined rules? I mean, what's the big payoff here? Well, the answer is the incredible,
almost magical power of compounding. Think of it like a tiny snowball at the very top of a very long hill. As it starts rolling, it just picks up more snow, getting bigger and bigger and faster. The same exact thing is true for your trading account. Small, consistent wins build on each other and can turn into some serious growth over time.
Let's look at our real-world example. Let's say you start with a $1,000 account and you're able to grow it by a consistent 10% a week. Now that might not sound like a huge home run, but look what happens. After just 2 months, that account has nearly doubled. And the best part? You did all of this without ever taking those huge account-blowing risks. You just followed the rules and let the power of compounding do all the heavy lifting for you. This is how you build long-term wealth.
And this quote, this really just sums it all up, doesn't it? You don't need to find that 1 in a million stock that goes up 1,000%. You just need a solid set of rules, a clear plan, and the discipline to stick to it, day in and day out. So take some time after this to really think about what you've learned. What are your rules going to be? How are you going to manage your risk? Write it down, make a commitment, and then you can trade with confidence.
So I'll just leave you with this question. Are you a gambler or are you a trader? Are you just hoping for that big win? Or are you building a sustainable business one smart decision at a time? The choice really is entirely up to you, and it all comes down to whether or not you're willing to make a plan and actually stick to it. So, what's it going to be?